Thank you. Next up, we're going to be talking about the biggest challenges and opportunities ahead for global technology and finance, and we have distinguished guests here to speak with us today about that. The United States is home to the world's financial plumbing, and we're also a global hub for innovation. So while different sectors within the financial industry may be facing varying challenges related to technology, the payment and the card industry is facing its own set of unique challenges. Today we're joined by a global leader from a globally leading company, Visa, who can enlighten us a little bit more on these topics. Bill Sheedy is the global executive for corporate strategy for mergers and acquisitions at Visa. He is joined by Tony Fratto, who is a partner at Hamilton Place Strategies. Tony has had various positions in senior levels in former White House, the Bush administration. And we'll turn the time over to Bill and Tony. Thank you very much.
Thanks, Allison. Well, thanks, and thanks, Bill, for being here for this. I'm just incredibly excited about this, especially because of on payments, it is we are talking about a global market, very much so now, maybe and more than ever before. And I was thinking about this topic, and so it's global. Technology is a huge interest. There are big economic implications. Obviously, I know you've been all been spending a lot of time talking about the security implications and privacy and all those issues. So it's an exciting area, and I was thinking about my very first credit card, which ironically around really like 30 years ago this month, when went off to college and got my first Visa card, which I was very proud to have, and I'm not sure I was 100% ready for the responsibility of a Visa card, but I learned a lot along the way and developed responsibility. But if you had asked me 30 years ago, and by the way, it's 30 years ago at the University of Pittsburgh, and you're at WVU, guys. So this is the most civil conversation you'll see between a Panther and a Mountaineer. We'll make it worthwhile, hopefully. But if you had asked me 30 years ago, do you expect to be using a Visa card 30 years from now? I would have said, well, like compared to what, right? Telepathy? I mean, what are the what other options? We didn't have phones. That was well before the internets, and so thinking about what the future of payment systems was not. It wasn't a question that was on my mind. It's on everybody's minds today.
Right. And look, how many industries can any of us think just as people, as individuals, as consumers, where the form factor associated with the product hasn't really changed in really 50 years? On one hand, it's an issue that we're grappling with in the United States, given that the rest of the world really has moved to chip, to EMV. As a company, we've helped support that movement around the world, and for a host of reasons, it hasn't happened here. The easiest way to answer the question, why hasn't it happened here, is before the internet, before anyone even talked about the cloud, the industry, in ways that consumers didn't need to worry about, or built all of this wonderful processing logic into central repositories through which these transactions will get routed. So you didn't need to put the at the time, you didn't need to put the sophistication into the consumer form factor because it was there in the cloud. And we managed risk in the system together pretty well for a long period of time. And it really is the cybersecurity issues that we're all well aware of, the vulnerability of millimeters that exist between read heads and the card, as we've seen in some of the merchant breaches, that can only be addressed by a shift in the form factor. So the quick and easiest answer to the question why is it worked really well. It served the industry well, it served the consumer well, and what we've seen over the years, the industry made a pretty significant investment in contactless chip a decade ago. And we put out a few 100,000 terminals. You saw large issuers like Chase issuing lots of chip cards. The consumer yawned. I mean, nothing happened, and the merchants really didn't adopt it. So unfortunately, sometimes you need events, as they played out more recently, to sort of spur action and investment. I think the other thing that we're all well aware of is that mobile and the software and the technology connected to mobile devices has now evolved at the right time, and it's just a wonderful confluence of events. As a company, we're really excited about all of the possibilities, about the sort of wealth of information and the interactions that can come from what's changing.
I definitely want to get into that because I think that's going to bring us to. I really want to hear about Apple Pay and that whole project, because I think it. For me as an Apple consumer, right? It is a game changer. I'm looking forward to the day when I don't have to bring a wallet, right? Just like do everything on my phone. And but you talk about this. Choosing the right technology at the right time, that's difficult. Because Europe didn't yawn. Europe moved ahead pretty quickly with chip technology.
Yeah, and if you look around the world, different markets moved at different paces for different reasons. But I will tell you that the reason why some of the earliest markets moved to chip was because their telecommunications infrastructure was poor. The processing capabilities within their countries, within their markets to move transactions was limited. So they needed to make investments in order to get where they needed to go with their payment system. The US payment system is by far the most sophisticated and most broad-based than any one in the world. We have 10 million merchant locations where consumers can use their cards, similar population economies around the world. The closest country we have after the US is Brazil. It's about 2.5, so, which is a chip market. The fact is that around the world, those investments have been made, but there's always been a need. There's always been an impetus, and it's clear.
Technology hurdle to clear that they needed to get past.
That's right.
We're more developed and we had less of a technological.
Well, and one of the wonderful things that's happening is this. Very often the case with technology is costs have come down, not just for the chips and the cards themselves, but the terminals. It used to be a really expensive investment for a small merchant to plug in a rather unsophisticated terminal into a landline, and now we have a dynamic where, because of mobile and because of shifts in technology, where almost any one of us can be terminalized, not just to pay but to accept.
That leapfrogging is, speaking of mobile, that leapfrogging is something that we obviously saw in really dramatic fashion in mobile telephones, right? And so you go to Africa. I remember even 10 years ago going, or maybe 6 or 7 years ago, going to places like Ethiopia where coffee growers were checking prices on their phones and being able to really be much more efficient market participants because they had access to information that way. But they didn't go running around looking for payphones in the intermediate period. So that's one of those leapfrogging opportunities.
I spent a lot of time on the U.S. market. It's by far our biggest business. But we do one of the things that's interesting in my job is look around the world. We've got 2.5 billion people outside the banking system globally. We've got 1 billion people in Africa with a whole host of issues from roughly 50 countries, a little bit more in Africa. And we bought a company a few years back that operates those mobile digital wallet systems that you described. Has over 40 deployments, mostly in Africa, but in different parts of Asia. And the ways in which consumers in those markets adapt. Folks talk about Bitcoin now, but transacting not with fiat currencies, but with top-up minutes. Yeah. And all those ways that folks can come together. The mobile device is changing probably almost every industry that we can imagine. I think we've been talking about the promise of it changing payments, and in markets like Kenya with Safaricom, it has. And for particular, payments work really well for markets that have and populations that have urbanized. Mm-hmm. The wonderful thing about mobile, from my standpoint, and it's one of the things that energizes the employees in our company, is that we now have the potential to partner with governments and mobile network operators and technology companies and banks to be able to reach consumers who are distributed geographically. And so, but the ways in which that will work Apple Pay in a developed market like the US or Western Europe, all the way through to the earlier stage markets where we'll never go to a card. We'll go right to a mobile device, but it doesn't need to be a smart device. It can be SMS based and everything in between. It's a pretty cool time to be in payments.
The size of that market right now, the growth of it is breathtaking, isn't it? I mean, think of all of the emerging, but especially even emerging markets, of course. Developing markets, even maybe more urgently, because they have that leap from cash to what next, right?
It is. So the opportunity is enormous. And the tools that we've just described, I think, are coming together at the right time for us to be able to meet the need. The other thing that's really been game-changing is within each one of the governments, at the top tier of their agenda is driving financial inclusion, increasing formality within economies so that you can create a more stable tax base. All of those things, I think, arrive at a similar place in terms of, all right, we need to create more electronic accounts for individuals who don't have electronic accounts. We need to drive efficiency, reduce friction between transactions. And so as a company that probably in DC is thought of as, wedded to banks who issue debit cards and credit cards to bank consumers, our growth, and frankly, the way that we talk to our board and our investors around the world is as much focused on, capitalizing on those opportunities in the emerging markets because, I'm a capitalist. Investors like to see growth. And so we are shifting lots of resources and priorities of the company across not just the developed markets like North America, but across all of these other opportunities as well. By the way, it's also a great way to get your employees to feel a lot better about what you're doing as an organization.
Absolutely, they should. I mean, I think on the question of, as you mentioned, frictionless, right? I mean, there are a lot of there seems like there's a whole shelf of holy grails out there for people. Frictionless is one, and then people don't like the time between the time it takes to conduct a transaction, right? Is really important. And you mentioned governments. The governments have very specific needs, right? It's not that I think I always think when I hear people talk about digital currencies and removing friction out of transactions, but their reasons are that there's friction there, right? Government often needs to have information. That's the friction, though.
Well, that's one form of friction. One of the reasons why I like our bank partnerships and distributing our products through banks is because, whether it's KYC or OFAC or, all of the things that we want to be in place so that electronic transactions as they move through are making good things happen, not bad things happen. Working in partnership with financial institutions who are always regulated and close to governments, I think is an important dynamic. And we think that differentiates us versus some of the emerging players.
I think that's right.
But I also think, when I believe it, I spend a lot of time with merchants. Merchants, as much as we talk about payments, merchants sell goods and they service customers. And when the consumer wants to transact, everyone has an interest. The consumer, the merchant, the networks, the banks, for that to happen in a clean and easy way. And that's really, when I think about frictionless, that's more of what I'm talking about.
In a secure way, right, for all of those parties, because if you have, it seems to me, if you have the confidence that the transaction is secure, it's going to be completed, it'll be quick, you're going to use it more. There are economic growth benefits to that, right? We know that, right, this widens the gap over cash.
It widens the gap over cash, and one of the things I think we all know is happening is the face of retailing has the potential to change. We're still queuing up behind cash registers because of the historic need to be able to transact in cash and behind cash registers. Well, while mobile will I think gradually take transactions off of card and cash and check, I think the secular shift to electronics is undeniable. You're also just going to see lots of movements in the ways in which retailers service their customers physically, digitally, but also in the stores, it's going to be pretty powerful.
Yeah, we see that in the Apple stores already, obviously, where they come to you, anyone can check you out. You don't have to go to a counter. And I joked the other day on Twitter that, like, I mean, because it happened to be true. I happened to have some cash in my pocket, and so I used it at a cash register, and the cashier was kind of stumped as to like what to do with it. It was at a Starbucks. It was like I thought I was going to have to help her make change, you know. And but really, it's like, but that gets into changing the face of retail.
Right.
So Starbucks, right? I mean, all of us who are using, you know, our cards connected to our Visa cards or other cards on Starbucks, we're essentially being trained on how to use devices and not use cash.
We are. I think ultimately the nice thing is we're not being trained to stop one thing and start something else. We're just finding new and more convenient ways of living. And you know, one of the reasons why I like our business in the United States in particular is that we've got roughly 2/3 of our transactions hitting debit accounts. And one of the fastest growing products are these prepaid cards. And so some of the prepaid cards we sort of market, distribute in partnership with retailers. A lot of them help bring different folks who are outside of the banking system into these products. But you know, ultimately, you know, you'd like for consumers to be able to transact, whether it's to pay a bill or transacting a coffee, so that they don't have to worry about their money. They just want to be able to do what they want to do.
Yeah. So okay. So I'm going to ask you, because it's a question I wanted to ask for this whole interview is where Apple Pay is and how that's going, and the excitement behind it and what it means for the collaboration with Visa. But then I also want to let the audience know, if you have questions, you know, let us know. I would like to save a little bit of time for questions for Bill if you have any. And in the meantime,
sure.
Tell us how this how this happened and how you expect it to progress.
So the idea that mobile devices would become a bigger and bigger part of payments isn't new, right? We talked about Africa, where in many markets it's a core element of how they transact. You know, we've seen a movement towards chip and contactless, and we built a technology standard that would support those transactions happening not only off a card, but off a mobile device. And we built that technology standard in partnership with other industry players over a decade ago. So we've all seen this coming. And I would say that just personally, in direct conversations I've had, but as a company, the relationship with companies like Samsung, like Google, like Apple, has been building in really positive ways for quite some time. So this did not come out of left field. I think you know, our view is, as most good companies do, you're rolled by your anxieties. You say, all right, we have good business today. You know, under what scenarios do we not have a business 5-10 years from now? We don't talk to people like that often, but we have to make decisions trying to stay relevant to the market, to consumers, to merchants. And so how that works in the context of mobile was a big uncertainty. For those of you who spend any time on this, the ways in which you put really important, sensitive information like payment credentials and identification on a mobile device has been an open question for a while. In particular, in a world where you've got a manufacturer like you know, the manufacturers who build these phones, we know who they are. They distribute their products through mobile network operators. They jointly own that space, and there's been a lot of uncertainty around, well, whose real estate is it? Who gets to hold that information? Not to mention the role of the networks and the banks. So I think all of that tension and uncertainty has been getting in the way of the industry getting traction. Among the wonderful things that you've got with a situation like what we have with Apple is that you've got more of a holistic approach that you can take because of the role that they play as a manufacturer of the device, as an operator of the operating system, and as a direct-to-consumer marketer. So, you know, I think the conversations have been going for quite some time. the difficulty, as you have in a network business where you've got billions of devices on a planet, and even in the United States, we have over 1 billion cards and 10 million merchant locations and thousands of financial institutions, is how do you go from a standing start to building something? I like to think that you have one chance with the consumer to get it right. And the nice thing about a company like Apple is they're really disciplined in the ways in which they think about the consumer and the merchant experience. And what you're going to see over the coming weeks as the application becomes more generally available for those of you who buy the new device. I've got one. We both do. It's a material improvement over previous products. I would recommend it. The consumer experience really is seamless. The antenna that Apple built into the device, even though there's probably only 3% of terminals in the United States right now have that functionality for contactless, that number will dramatically increase. Not in years, but in weeks and months. Mostly tied to all the investments that folks are making around chip generally, and the ways in which the consumer is presented with a virtual representation of their card, which is what they know. Yeah. And they have a high degree of confidence that they're transacting not with Apple, but with their bank and with their Visa card or other networks. I think it bridges the gap between physical and virtual really well. And I think, for those consumers who want to try that experience, I think it's going to be a positive experience. And I think that we'll see a natural movement in the marketplace with competition like Google with Android. They have a different approach to it, but we're convinced that the other approaches, whether it's HCE or putting the credentials into a secure element on the phone, which others might do, I think you're going to see a proliferation of technology solutions, but ultimately, I think that it'll be a positive experience that you're going to see serious traction in the market.
Do we have any questions? No. Well, to that end, about the technology and the products, and you have to think about it both from the software side of it and think about encryption and safe systems, but also the hardware also. But right. when I think about what a business is, what the business is, I think of you are who you hire, right? So is Visa a technology company? Because most people think of Visa as a critical part of the finance system, right? That maybe uses technology, but you're in the valley, right? And but do you hire more engineers or MBAs?
So you may be surprised to know that roughly a bit more than a third of our employees are information technology people. So when you look at the biggest parts of the company, we are a technology company. That being said, our business is one thing. We're a payments company, and so it wasn't until really 6 or 7 years ago that we separated from the banks who owned us and governed us, and we became a separate company. But even before then, while we really weren't thought of or known as a standalone organization, the fact that we are a brand that is so inextricably tied to banks and banks' products, we like on many levels, but it does confuse who we are. We don't make loans, we don't price interest, we are a technology organization that moves payments. So internally we actually reverse it and say we're a payments company that focuses in on technology solutions to reduce costs, to reduce risk, and to allow for anyone to transact anywhere they want. And so we have 10,000 employees globally. We operate multiple data centers. Obviously, we market the brand. We maintain relationships with the banks. But the biggest part of the company is a technology organization that we think works pretty well.
And staying ahead of the technology, there are a lot of challengers out there who are innovating technologically every day, right? In digital and everywhere else.
Yeah, and look, as is with any industry, whether it's PayPal 15, 16 years ago that changed how you service an ultra small merchant and facilitate transactions online in ways that were better, you learn from that. Today, as much as Cryptocurrencies like Bitcoin are a new form of innovation, and there are lots of things about it that are uncertain and maybe even concerning. There's still things about the ways in which those transactions are working at a technology innovation standpoint that we learn from. And among the things that I don't think people talk enough about are the point of sale environment for quite some time has been a really unsophisticated place. We were able to pass basically yes and no messages back and forth. We did it pretty well in milliseconds and managed the risk. But we're going now to a world where the point of sale is going to be an IP address, and you can light up that, that environment, if the right things have been done, to have it be much more interactive, much more value add, and manage risk and loyalty and other things that are better for the consumer and the merchant. That's going to all play out over the next handful of years. And as a company, we have to live every day making sure that we've got the right parts of the organization thinking about skating to where the puck's going to be, and make sure that we can maintain the position that we can to add value to the banks and the consumers and the merchants. And so that's how we're trying to run the organization. It's hard in an environment where things are changing as quickly as they are, but it's pretty exciting.
I'll say it's exciting. I'm not going to ask you to answer the where are we going to be 30 years from now, because I don't know that we don't know.
Hopefully,
right?
I'll be at a beach somewhere.
Yeah, hopefully we both are. But our kids will be finding out. But thanks for your time, Bill. Thanks. I have 50 other questions for you, but we'll save it for another session. Thank you.
Thanks, Bill.
Thanks, Bill.